Let's talk about VWAP, guys. Volume weighted average price. Every trader's friend. You see it on multiple charts, almost on a daily basis. We're going to dig into, first of all, what is VWAP? And then second of all, how we can go about using it to assist our trading. Again, regardless of your time frame, if you are an intraday trader, you should be looking at VWAP, guys.
Yes, you should, Brendan, and thank you for that. I get to do the important part here, which is, well, I'm kidding, the serious part. You have to understand what the definition means for volume-weighted average price. So let's just get this out of the way right off the bat here. VWAP equals the sum of price times the volume at that particular price, and it can be divided by the sum of total volume. The key thing here, and I know we're going to go in depth about this so you can understand it a little bit better visually on a chart, but for each individual time frame, if it's a 1 minute chart, you're summing those figures for a 1 minute time frame. If it's a 10-minute chart, of course, it'll be a little bit different because you're summing up a different time frame on that candle. So now that we have that out of the way, what does it look like visually when it's on your chart? Because I know we all have it, and most traders are looking at it, that line right in the middle of everybody's daily chart, or probably more likely a 1 minute or a 3 minute chart, Sean.
Yeah, I'm going to go with, thank you, Neil. And it's the only chart. And if you watch the show, you'll know it's really the only technical indicator that I use is volume weighted average price. And I use a 1 minute chart for scalping purposes. And I don't think there's a better example today than Ford. So basically, what you want to try to identify, at least what I do when I'm trying to use VWAP, is what direction you want to go into. So if we're going to look at Ford on a daily chart, this is just a moving average 50 period. I've identified here that Ford broke this 50 period moving average, and the trend, obviously, in the last 1, 2, 3, 4, 6 or 7 days has been upside. So I'm already looking long for Ford. So with that being said, let's now move over to today's chart. The important thing to look at, this is 9:30, right? And I have this here on purpose. We can actually maybe move this over a little bit to show you the end trade here. But volume-weighted average price is going to give you a little bit of a misleading indicator in the first, let's call it, 10 or 15 minutes. Why is that? Because the very first market on open print is a monstrous print. So that will affect, remember, it takes the sum of the volume, so that's going to affect this and give you a volume weighted average price basically right where that happens. So that's why when you're looking early, I don't consider even this break here at 9:39 when we break above VWAP. I'm not super interested in that break either because volume weighted average price is still trying to figure itself out. You can see it swoops down because we get volume added up here on a move down in Ford. If you're looking long, this move down is great to pick it up, but we're talking about VWAP here. So what I like to do is look at it maybe, like I said, around 10 o'clock, something like that. We know we want to get long this name. So what I wait for is, I don't want to take the high of the day at this point. I want to wait for a pullback into VWAP. So when we get that pullback in, to me, that's where you green light this trade. So you can start to get long in front of VWAP. I think that's a very important key. When it breaks, it can break nasty. In this situation, it doesn't. We already want to go long for it. So we're very, very confident in our position. I would start to get long here, 1275. Not only is VWAP, we're at VWAP here, but it's also at an important level, 75. I love 75s, 50s, and evens. So those are key levels. And then look, if you're going to get long on VWAP, I'm actually going to hold it, all the way to day's low. That's how much I really like Ford today. So I'm going to give it a shot to bounce around here on VWAP. Once you get this move down, you say, uh-oh, I'm in trouble. I'm going to average in. So I've only taken maybe a third or 50% of my trade down here. You're waiting for it to go lower. But surprise, it doesn't go lower. This break back to the upside here, this break of VWAP at 75 again, it's actually 73. This is where you green light the trade and you can put on your full position. Because not only did you test VWAP, but it proved that we held something. So we held the bottom, then you get the break, and that's the confirmation ride all the way to the top. So right there, you get a VWAP break, a hold, and then a break back to the upside. To me, on Ford, you're up 7%. When this happened, you're up 2 or 3%. So we want to be long. We want to hold our longs and hold it with confidence. Then you get the break of the already day high, and then you're off to the races. So use volume weighted average price as an indicator to know when to get in on pullbacks. And then if the pullback's already happened and you're not in, use it as a break to go long again. So this is a good example on just a 1 minute chart using VWAP on a strong name that you want to be long in. That's Ford.
So understanding the directional movement of a stock based on whether it's trading above or below VWAP is a simple concept to understand. But we can also add, another level to that, in that how far is it trading away from VWAP? And in that picture on that chart that Sean just showed you, you saw it gets extended and extended and extended. So that gives you even more incentive to understand that this is a very strong instrument, regardless of whatever the instrument is. I want to talk about the big guys. Let's talk about financial institutional size money and the way that they use VWAP, guys, because it's important to understand that there are people who are basing their positions, maybe longer term positions, off of where a stock or any instrument for that matter is trading throughout the day.
This is a very, very important one. They're actually, you don't call them order filling, but when you talk about the big institutions, when they're tasked to start buying up positions, this could be a mutual fund, whatever it might be, a family shop. They're looking to get the best possible execution while buying a stock and not affecting the price as much as they can. And one of the metrics that'll be used is, can they beat the volume weighted average price? Let's imagine you had to buy 1 million shares of Virgin Galactic. They're trying to get a price that's going to be better than the volume weighted average price by the end of the day. You ask yourself, well, how would that look and how is that going to actually happen? Well, if you were trying to do that, you would be every time, and the red line here is VWAP. I'm going to get to what that blue line is in a quick second, just as a bit of a contrast. But this red line here is VWAP. Every time it travels below, you'd look to be a buyer. These institutions would look to be buyers. And then when it goes above, well, they don't want to buy as much above that because their average price then gets worse and worse with reference to the volume weighted average price. Now, I said there was a blue line on this chart. The red, this nice smooth one going up here and sort of steadying along, is going to be your volume weighted average price. The blue is a simple moving average. And just to contrast the two, you'll see a moving average is constantly going to be adjusting. It's basically a 9 minute, so it's going to, and I did this on purpose so that it would hug essentially what the price action will be. As far as being an indicator for an obvious trend or getting an idea how you can use it against institutional orders, it's not of any use. Breaks of this is going to trigger multiple trades over and over again. You'll be scalping in and out for 100 times a day if you use something like that. However, identifying that simple fact that if you are bullish on Virgin Galactic, the stock had gapped up and you're looking for places to buy it, let's highlight what the institutions might be thinking. Based on that theory, that they are going to be buying more as it gets below the average price and reluctant to buy it above that price, how do you take that to your advantage? When it gets above, you'll see it actually a couple of times dislocate away by, call it like 50 or 60 cents. Then again, by about 40 or 50 cents. When it gets below this price and then starts to drag below, barely gets that 30 pennies. The next time, it actually gets even less than that by about 20 or 23 cents. So you can see, as Virgin Galactic got below that volume weighted average price, you can infer that there was more aggressive buying earlier on, not waiting for it to dislocate as far away on the top end, meaning there could have been some eager buyers. How do you use that information? When it breaks back above, you sort of identify that as institutions could be bullish. I want reasons to go long. Now, do you go long on a VWAP break, as Sean would have showed you? Absolutely, that's going to work. I mean, that's going to be a better entry than what I'm going to show you, but they all work out here. So the next thing that happens is you look towards the last time it tests back towards VWAP. Can it get there? Can it break through? Can it bounce? It does not. So you get this hold at 50, you break the high of the day, and then you take a breakout long trade. Whether or not you're buying in front of VWAP, as Sean would do, and get a perfect price, or you simply allow it to bounce away from VWAP, no longer testing, and then giving people that opportunity to buy lower, suddenly you're chasing prices if you wanted to be long in Virgin Galactic because it's not even giving you the chance to accumulate. That long through the breakout is another way you can take advantage here. So you identify that the buying started earlier below VWAP than the selling was away from it to the top end, and then you're aggressive with your longs once it gets back above.
All right, so a lot to digest there, but if we understand the simple fact that, institutional money is going to use VWAP as a bit of a benchmark, so they're going to base their average price in a position off of where that instrument is trading versus VWAP. And as Neil mentioned, they're trying always to get a slightly better price than where VWAP is. Sean has a great example of something that happened in Ford recently that is, Sean, I think a perfect example to show here.
Yeah, it is. And it's actually, look, I've known Neil for almost 30 years here, and I just learned something from him. Dislocate away from the price. And that's exactly a perfect terminology. So thank you, Neil, for that one. And it's actually happening as we speak. I have no idea if this is what's going to happen. But if you look at Ford here, I brought this out for a 10-minute chart just to show you, still with VWAP on here. Look at how far Ford gets. Remember, we're talking about the big institutions, and what they're trying to do is move money around, right? They want to capture spread. They want to capture profits for their investors and not let things, they don't want to answer questions. Hey, when Ford was all the way up here at $13 and we're long at 11, why did we not start selling some? Because this could crash back down. So what they try to do is notice how far this is extended away and then start to try to close this gap, because they know that if they're the sellers up here, they're getting the best prices. So if they start pushing this back down a little bit, retail clients and whatnot will join, and it may actually get the price to come back in, and then they're the winners because they've sold near the top. The example is perfect, I think. Ford, historically, we're just going to go back a couple days here, about a week, almost 7 or 8 days here. You can see this is 1150. So this is where VWAP is. Current price at that time, 1138. So that's, let's call that whatever, 15 pennies to the downside there. Same thing here, another 15 pennies. We basically don't get away. This is 1201 when the price is trading at 12.15. That's another 15 pennies. I'm trying to find areas where basically the 15 pennies gets broken. So here you have 12.30 and this is 12.49. That's 20 pennies. So look what happens. They bring Ford back up to get closer, to close that gap. And I just think right now, if I'm going to look back at Ford, and we can double check this in the next couple of days, but I believe Ford probably pulls back in. And remember, this is a 10-minute chart. So over the next, couple hours, we may pull back in here as we try, as the big guys, the institutions, mutual funds, hedge funds, algorithms, everything like that, try to pull Ford back into VWAP. So every single time we had some dislocation, we actually pulled back into VWAP. So I expect that here. Right now, 1306 is where we're at. Current price, 1340, Brendan. So that's 40 cents there. We're way out of whack.
Understand that it's going to draw a lot of attention regardless of what you're looking at as far as a trading strategy. Volume-weighted average price is going to have a lot of eyeballs on it when price moves through it either direction. So a lot of key information in that video, guys, on VWAP. Hope you enjoyed that one. Here's Valeria.
Hey guys, thank you for this great information. Dear viewers, please subscribe to this channel to see more great videos.